Hey guys, this is Market Update. In this video, we're going to look at how long we have left in this expansion phase, potentially, because we are in an expansion phase. We're a little bit early, but it's happening. A lot of people are asking, should I get in now? Should I wait? Is the price a little bit too high? Have I missed out for this cycle? So let's have a look at that. I think it's better to look at the longer term trend for Bitcoin because the price chart right here is not going to give us any clues because we're at all-time highs and we've broken through every single level. And this is what Bitcoin does in its expansion phases. And so it's better to look at the levels at where Bitcoin might get in relation to its, longer term growth. So for Bitcoin's price, you can see we're just sitting at an all-time high. This candle is so bullish because we're basically not even rejecting from this high right here. You can see the previous all-time highs here where we got rejected from. We just sliced through those. This is what happens when Bitcoin goes into one of its big expansion phases. There are things that can knock us. CPI is coming out today. Inflation could remain a little bit sticky, but it's very clear that the macro cycle is way turned at this point. And so, Bitcoin is just going to outperform most other stuff as it usually does within its cycles. If you do trade, check out Bybit. You can get a deposit bonus up to $30,000. I'll leave the link down below. You can check all the details via that link. What we really need to look at, though, is Bitcoin's longer term trend and the cycles that it has, because the cycles are very, very clear. Bitcoin is not a company, it's not a stock. And so it really follows the macro cycle and the debt refinancing cycle very, very closely. And so what really happens with Bitcoin is that Bitcoin has a fundamental growth, like it has adoption as a network, and that's just growing. Just like Facebook did back in the day where it just added users every single year, right? And so that happens, but of course the price is also heavily linked to the central bank cycles. And so the cycles are very clear. You get these drawdowns, you get the kind of recovery and the expansions, and you can just see that happening very, very clearly over time. And so we're in an expansion. And so what we can do is plot the price cycles where the price gets overbought and then gets sold off and oversold. And so we're in an expansion phase right now. If you plot that growth over time, right, what I do is you can see the kind of midline, which is here, the overbought level, and then the oversold level, right? And so the midline is kind of the trend rate of growth. And then as the price oscillates around that, it either becomes expensive or cheap. And I believe that Bitcoin continues to grow, and so I can call it expensive and cheap because the trend is up to the upside for growth. You can see we're coming out of this now. And so the Bitcoin price for this cycle, in my opinion, is no longer cheap. Anything under this midline would be cheap, and an investor must be active in buying there. We're coming way out of that at this point. Now, in previous cycles, each time that we break the all-time high, it's actually still a zone where you want to be buying because usually the price inflects way up to this upper line and then only draws down around about to the previous all-time high. And so, at this price level, it's not cheap and it's not early. We're probably mid-cycle at this point in terms of price. We're actually still early in terms of time. So it's a little bit early in terms of this price expansion, but we are probably around mid-stage. So I still think there's a long way to go. Like for me, based on time and price, and if we just go straight up to this line, you're looking at around 100K, maybe 120K. Now, if the bull market lasts for even longer, a lot of people will be looking at around 2025 to be some sort of price peak. That is, from a time perspective, around about when Bitcoin would usually peak. But obviously, as time goes on, the price at which Bitcoin can get to actually goes up, right? Because over time, currency debases, Bitcoin adds value to its network. If you waited to 25, you'd be looking at around 150K based on this model. So around here. We don't know where it's going to get to, right? We don't know. But in terms of the cycle, we are kind of mid-stage, in my opinion, at this point. So mid-stage, you're not getting cheap Bitcoin. It's not cheap. It's not great. You're not getting it at 15, 17, 20K, 22K, right, which we're getting down here. The trade is slightly more certain than it was here, right, because we're in an expansion phase. Yes, you can get 20, 30% drawdowns, but the expansion phase is pretty clear. So look, at each $1,000 we go higher, the risk reward for the short term actually gets worse because you're getting closer and closer to what would be considered a kind of peak for the cycle. But, you know, we're mid-cycle for price, mid-stage, and we have maybe kind of 12 to 18 months left, 16 bars, 16 months, something like that. So I still think the opportunity is here. When we get up to these levels, that's really when you're saying like, well, what else can happen at this point, right? How can we then go ever higher? You're getting into really kind of mature stage where you're thinking, well, if you're a short-term trader, going long here is kind of not the play. We're still not there. And so short-term, I think we're still in that mid-stage. Longer-term investors are probably still buying here. It's only up here where you start to get very wary of like, well, you know, where can we go from here? There's nowhere to go, right? So still mid-stage in my opinion. Some other metrics are showing this as well, which I think are really important. This is from TechDev on Twitter. This is the liquidity cycle. So again, he's saying, I think the bars are around 2 months here. He's saying spacing between the the kind of low and the high of a cycle is around 9 to 11 bars. So times that by 2 because these are 2-month bars, I believe. So let's call it 18 months or so. We have already crossed over into the expansion phase for Bitcoin based on the macro, right? So the macro economy has turned. It's going into a liquidity expansion phase. That looks to be happening. We're in it already. We're not early, right? We're in it. And so mid-stage, again, that's what this is saying. And then MVRVZ, I believe, you can see that here. We are right about mid-stage. I think that's unrealized profit ratio. We're mid-stage. You can see that here, right? So if you look back in the previous bull market, that was where we are right now is mid-stage. Then you have the blow off top and the bull market. So again, we're not in the great value buy zone like we were before. We're just not. We're in the mid zone. We're in mid-stage for the price for this bull market. All of the data is showing that. So that's the short-term macro cycles. They happen every 4 years. So you see Bitcoin is, in relation to those going up and down. That is the short-term central bank manipulation cycle, because what they have to do is print money to debase the currency, right? Which then forces the price of things up and creates inflation. People start noticing that the price of stuff seems to go up really quickly, and they start getting a little bit uneasy. And that's when the central bank says, oh no, we have to stop this now. And we have to draw down, and that happens. But why does Bitcoin keep going up after 15 years, making higher highs and higher lows? It's because it is the direct mirror image, or the opposite of the fiat currency system, which must ever expand. Because the fiat currency system is based on debt, which is completely unpayable, it must expand to continually make the debt appear cheaper than it is. This actually has to keep happening. You may see images like this, which is the debt outstanding in the US, and you may say, we're going to have a big crash because the debt's unaffordable. This is the crash. This is the crash. Economies do not crash down. They actually crash up through hyperinflation because the currency is printed to try and debase the debt itself. You don't crash down. What they do is crash the fiat system up and just completely debase the fiat currency. This actually has to keep happening to fake the GDP figures higher, because they cannot have a reduction in the price level. The fiat system would collapse, and so they don't let that happen. They print money, they create debt to actually force GDP, the fake figure of GDP, ever higher. And unfortunately, what that means is that assets also go up in value, which creates unaffordable assets and an unaffordable lifestyle, right? And so inflation in energy, food, housing, shelter, that is going to continue. That is how you become poor. Not a crash, but actually in a upwards crash of prices. That's how things get less affordable for the individual. This has to keep happening because the natural rate of the economy is to drive prices down, right? If you think, the amount of input per unit of output, machinery and AI and robotics, that is going to crash the amount of necessary labor for each unit of output that we create in the economy. That is going to force prices lower. But the fiat system cannot allow that because it would crash. And so it's going to crash upwards by creating more debt. This is a mirror image of how technology is forcing prices down. It cannot let prices fall. And so it will create more and more debt to fake this fake GDP number upwards to 2% that they want. So this is actually a mirror image of how much value is being created in society through AI and robotics and all other technology. The fiat system has to take that away from you and steal that away from you by creating debt and forcing prices higher. Otherwise, it would all collapse, and they don't let that happen. So how do you get out of this? Because all of that productivity gain is being stolen away from you by this system. You have to buy assets. So the S&P 500 and the NASDAQ. Why does the NASDAQ outperform the S&P? It has fewer losers. The NASDAQ 100 is mostly a tech index at this point. The S&P has far more losers who are not producing output, in the same way as the technology companies are. So that's why the NASDAQ outperforms the S&P. Why Bitcoin? Bitcoin is absolutely fixed as a monetary system, and it just has right now major growth as it's being adopted worldwide. The fiat currency system has to keep indebting itself and printing money to buy back this debt during the low end of cycles. That's how it works. And you cannot fix it from inside that. So you have to swap your fiat currency for something else. The NASDAQ has worked, the S&P has worked, but you're buying many losers. The NASDAQ outperforms because it's concentrated on winners. Cryptocurrency is macro. It's its own thing. It has a lot of growth and a lot of volatility. But Bitcoin, of course, is a way to get out of that system and be in a fixed currency, which can actually price in the reduction of prices through technology. As robotics and AI comes in, we should actually get richer. We should produce less. We should produce more with less input and actually get wealthier as people. The fiat currency system has to steal that away from you, but Bitcoin doesn't. And that's why things are going to get cheaper for you. Fiat is insolvent. You have to remove yourself from it. Debasement of currency is absolutely necessary and will rise and keep getting worse exponentially as technology forces the price of things down. The faster technology forces prices down, the faster the currency has to be debased to fake the GDP up higher. GDP is a broken measuring stick. It should actually fall and get lower as we get wealthier. Spending must continue. Debt must continue. Left or right, whoever's in power, it doesn't matter, because they're going to keep spending, because that's what people want. They want to see GDP going up, and they can't face price deflation. Recession is not allowed. It is not allowed because that's when the price spiral starts to go down, because technology is forcing prices down. So they have to print. They have to indebt themselves. It has to get worse. There is now $4 of debt for every $1 of growth in the economy. That's going to get worse because technology will force prices ever lower. The fiat currency system has to indebt itself to keep itself above water with this fake measuring stick of GDP. They must prevent prices falling. This is the collapse. It won't collapse down, it collapses up. So remove yourself from this by buying assets in any way that you can over the long term. I'm not trading Bitcoin for fiat profits. I'm just exiting this system. That's my rant for today, but it is extremely obvious at this point that you have to exit fiat. You have to buy assets if you can. Crypto allows you to buy $10 at a time versus a house, which is very, very difficult to buy, very slow, very cumbersome, not a liquid market. So that's why Bitcoin as digital property is becoming, so desirable. If you do trade, check out the Bybit deposit bonus. I'm also going to be updating the crypto investor course with some of these thoughts as well. Check that via the link below. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.